It is Monday, August 17, 2026, and XRP is doing something it has not done since 2025, trading below the $1 mark. The token has slipped to around 98 cents on some exchanges, and right now it is hovering between 99 cents and $1.03. That matters because $1 is not just a round number. It is a psychological floor that thousands of retail traders watch, and once it breaks, fear tends to accelerate. The most striking detail today is not the price itself, it is what traders are doing with it. Even as the price slides, positioning data shows traders are increasingly betting on a rebound. That is a huge tension. The crowd is bearish, the price is weak, but a group of traders is quietly building upside exposure. This video explains what is actually behind that bet, what the data says, and the levels that will decide whether those traders are right. The online mood around XRP has collapsed. According to live search data from the last few hours, commentary is now the most bearish it has been in 3 months. That is not just grumbling on social media, it is a measurable shift in sentiment. When crowded negative chatter becomes this loud, it often marks a point where a lot of weak holders have already sold. That is one reason contrarian traders become interested. However, bearish chatter alone is not a buy signal, because sentiment can stay negative for a long time. The important question is whether the price is confirming the negativity or refusing to fall further. Right now XRP is refusing to fall cleanly away from $1, and that is creating a subtle divergence. The fear is extreme, but the price is not in free fall. Let us put today's price in context. XRP is now roughly 70% below its January 2026 high of $3.40. That is a brutal drawdown in under 8 months. On the technical side, every major moving average is pressing down. The 50-day exponential moving average is around $1.087, and it is acting as a ceiling above the current price. When a token is below all its major moving averages, the longer-term trend is still clearly bearish. The $1 area is also important for a second reason. XRP has repeatedly tested this zone and briefly lost it. Each retest weakens the support, because buyers who defended it before now have less confidence. That is why today's battle is not just about a single number. It is about whether the broader market structure can avoid a deeper breakdown. Here's where today's story gets interesting. While sentiment is bearish, on-chain activity is telling a different story. Research shows XRP has more users and fewer sellers. Network activity has rebounded even as the price has slipped back to $1. In plain English, that means more addresses are interacting with the network, but the typical panic selling you expect after breaking a major support is not showing up in the same way. Fewer sellers at this price can mean two things. Either the remaining holders have stronger conviction, or the sellers have already left. If selling pressure is exhausted, a modest amount of new demand can cause an outsized bounce. But there is also a frustrating side. XRP still cannot escape $1 despite these better on-chain numbers. That tells you the current market is being driven more by macro fear and leveraged bets than by organic usage. One high-profile comment added fuel to the negative fire. Veteran trader Peter Brandt said he would convert a hypothetical 500,000 XRP position directly into Bitcoin. That is a symbolic statement, not necessarily a trade, but it matters because Brandt has a large following among chart-focused traders. When a respected figure says he would choose Bitcoin over XRP, it reinforces the bearish narrative and can push some undecided holders towards selling. However, it is worth analyzing what this really tells us. Brandt is a Bitcoin maximalist by reputation, and the comment reflects his long-standing preference rather than a fresh XRP-specific warning. The more important signal is how XRP reacted. It did not collapse on the comment, and it even rebounded back above $1 on some exchanges. When a market absorbs negative headlines without making new lows, it can indicate that much of the bad news is already priced in. So why are some traders leaning the other way? Research shows traders are increasingly betting on a rebound even as online commentary turns extremely bearish. This often shows up in derivatives markets, where bearish bets surge but a smaller group takes the opposite side. The logic is simple: if everyone is already negative, the next surprise may be to the upside. There is also the psychological weight of $1. Some traders view a brief dip below $1 as a liquidity sweep, a move designed to hit stop losses before reversing. That does not mean the rebound trade is safe. It is a high-risk, high-reward position. What gives it some credibility is the on-chain data: more users, fewer sellers, and no clean break away from the $1 zone. If the rebound traders are wrong, the next stop is very likely deeper downside. For anyone watching today, the levels are relatively clear. The immediate battle is $1. A sustained recovery above roughly $1.03 would help repair the short-term market structure. Above that, the 50-day EMA near $1.087 is the first real ceiling. If XRP cannot reclaim that moving average, any bounce is likely to fail. On the downside, the danger zone is below 98 cents. A daily close under that level would confirm the break and could bring faster selling. Longer term, one roadmap suggests that a break above $3.18 with strong volume could open the path toward $4.80, but that is a very long way from current price. Right now, the practical question is much smaller: can XRP hold this psychological floor for a full day and build from there? The answer will shape sentiment for the rest of the week. Looking ahead, the next 24 to 48 hours matter more than usual. If XRP can reclaim and hold $1.03 to $1.09, the rebound trade becomes more credible and bearish chatter may start to fade. If it fails at the 50-day EMA, expect another test of the 98-cent low. A key factor is broader crypto sentiment, because XRP is not trading in isolation. If Bitcoin stays under pressure, it will be hard for XRP to stage a convincing reversal regardless of its own on-chain activity. Watch for two things: the daily close relative to $1, and any sudden drop in bearish bets. A sharp reversal in positioning would suggest the crowded short trade is unwinding. For now, the market is caught between a weak trend and a resilient floor. That is exactly the kind of environment where false breakouts and false breakdowns happen. The real takeaway from Monday, August 17, 2026 is not that XRP is cheap or doomed. It is that the market is deeply conflicted. Price is below $1 for the first time since 2025, sentiment is the most bearish in 3 months, and bearish bets are surging. Yet at the same time, on-chain activity shows more users and fewer sellers, and traders are placing bets on a rebound. That combination does not automatically mean a rally is coming. It means risk is elevated in both directions. If you are watching XRP, do not trade the headline. Watch the levels: $1, then the 50-day EMA, then 98 cents. The next move will be defined by what actually happens at those zones, not by the noise around them.